What is going on, everybody? Welcome back to yet another video. So in today's video, I'm going to be sharing with you guys the number one thing that's going to help you make more money in the stock market. Real quick, as always, if you guys could, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. Alrighty, so start doing this to see more trading profits. We're going to be discussing what this is and how you can start implementing it into your trading ASAP. Also, I'm going to have to move myself all around the screen so you guys can see the words. But what is it? I want to start this off by looking at two different scenarios. Scenario number one, the market opens, price comes to your entry level, and you do not take the trade. As a result, you watch the trade do exactly as you wanted, but you're sitting on the sidelines. What are you more than likely doing? You're getting a little bit of FOMO. You're thinking about all the money that you could have made. In reality, not taking that trade costs you money. Now, before we get into this, let's talk about scenario number two. Price is setting up and you think about entering, but it's not a trade you usually take. As a result, you don't enter, but the trade does exactly what you thought it would do. Now, what do these two trading scenarios have in common? I want you guys to pause the video for the next 30 seconds to a minute, and I want you guys to really think about what these two trades have in common before you continue watching the video. It's very simple. You missed the trades. Now, how do we solve this issue going forward? Again, not taking those trades actually costs you money. So how are we going to solve this going forward? A lot of people don't talk about this, but going back and journaling your missed trades is going to be key. So let's go over a few different scenarios on how you can start implementing this into your trading. Today is a very good example. I personally did not take this trade down here. This was a missed trade that I am going to go back and journal and review. That way it does not happen again in the future. So if we're looking at QQQ, what do we know about these intervals of 5? They are whole psychological support and resistance areas. 315, 320, 325, 330, whole psychological numbers of support and resistance. So if we're looking at QQQ, I specifically even said earlier in the live chat that 315 was super strong. So looking at the overall price action on QQQ, we came down towards 315, we bounced. 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 As a result, what does this tell us? 315 is a very strong area of support. Now, again, this is not a trade I would typically take, but being able to go back and journal is going to help me going forward not miss trade scenarios like this again. And then real quick, in case you guys did not know, I do have a 450-page book on Amazon titled The New Age of Technical Analysis. And in this book, I go over my entire day trading and swing trading strategy, how to find bounces, rejects, support and resistance, how to use Fibonacci, the indicators I use, specific day trading and swing trading setups I look for, plus much, much more. So if you guys do want to check out The New Age of Technical Analysis, the link will be down in the description. So not only are you journaling, but it's also helping you create a playbook around that setup. That's how we start finding our definition of A+ trades. Because if we go back and we see the same exact setup 50 times and we journal through the entire thing, more than likely when it happens the 51st or the 52nd time, we're going to say, we've seen this so many times before, and we know that this is a high probability setup. Therefore, as a result, we know that this trade has a high probability of working out, and we can execute the trade and take advantage of the setup. So what about this trade could have led us to getting long in this scenario? Well, simply looking at the first 4 bars of market open and even this 5th one over here, again, notice how we wick down, back up, wick down, back up, wick down, back up. After we noticed this 3 times in a row, what could we have done the 4th time that price started to come down towards 315? We could have gotten long, and our stop loss could have been placed right below the area around like 314.9 to 314.8. So therefore, at that point, your risk was very limited and your potential reward, this thing climbed all the way up to a high of 319. So this is a really good example of a missed out trade that you can go back and then journal. Here's another really good example. What about bull flags? What do we know about bull flags? Typically what they're going to do, and it actually looked a lot better on SPY, so we can take a look at SPY. But what do we know about bull flags? Bull flags typically have 3 bars of consolidation. Again, this comes from going back and journaling and making mental notes about setups like this. So what do we know about bull flags? Typically there's 3 bars of consolidation, and most of the time that consolidation is going to come back, tap the 8 EMA before the continuation to the upside. So if you ended up missing out on this trade today, or you're just going back and you're journaling about potential trades that you could have taken, Well, what do? You're going to make note, okay, there was 3 bars of consolidation. As we started pulling back on the 5-minute time frame, there was lowering volume, letting us know there was not a lot of selling pressure. And as soon as we tapped that 8 EMA, that is where we saw the buyers enter the market and they pushed it back up towards the high of the day. Again, if you can go back and you can journal over that and you start seeing it time after time after time again, more than likely you are going to be able to take this in the future because you've seen it so much and you have the conviction behind the trade. Another scenario can just be a basic Fibonacci retracement. Now, I did not take this trade. Unfortunately, I ended up missing out on it. I literally walked away from my computer as soon as this happened. But just using basic Fibonacci retracements, again, say you missed this trade, what can you do to help you take it in the future? Well, take the pivot low to pivot high. As we see, we came back, we held the 50% retracement, held the 61.8. Typically what I do is I break it down to a 1-minute time frame and look for a sniper entry. But let's just say that you were waiting on the 5-minute time frame for a 5-minute candle close. Well, what can we see happen at that 61.8% retracement? Price came down to it. We have a nice 5-minute hammer. Buying volume increases right off of the 61.8. So as a result, you can journal. And again, what I forgot to mention earlier, what's very important is you actually screenshot all of these missed out trades, put them in a Word document, a PowerPoint, whatever it may be. Take those screenshots. That way you can go back and you can review these on your free time. So say you ended up seeing this 5-minute candle close above the 61.8. You could have gotten long with a stop loss right below 407.4 to 407.3. And as you see, this ended up working out perfectly. Again, as you start to see this over and over and over again, it is going to help with that confidence going into the future, and it's going to help you create a playbook around that trade. But that's going to wrap up this video. Hopefully that did help you guys. I hear a lot of traders say always journal your winning trades and your losing trades, but a lot of people leave out the missed trades part. There's a reason why they are a missed trade. And if you are going to take advantage of those setups in the future, you need to go back, you need to journal, you need to build that repetition and that confidence in that setup. Start taking notes about specific things of the setup. Again, like the bull flag example that we talked about. 3 bars of consolidation, right back to the 8 EMA before the continuation back up. So start taking notes about certain things in that setup. That way it helps you look for those things in the future when that setup presents itself again. And hopefully you end up taking the trade. Hopefully this video helps you guys make more money in your trading. But as always, if you guys did enjoy the video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. As always, everybody have an amazing rest of your day, and I'll see you guys in the next video.